Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We're taking a look at what's going on this morning as we, progress towards probably one of the most difficult trading days 4 times a year, and that's end of quarter. End of quarter, unlike end of month. So remember, it's Wednesday, but Monday is end of quarter, the last trading day of the quarter. So remember that the last 3 days of the month, and I like to think of them as the last 3 trading days of the month, there are usually heightened redemptions. There is also, addition to that, sector rotation, which is just a fancy way of saying profit taking and bargain hunting. Anytime anyone says sector rotation, just hear in your mind profit taking, bargain hunting, taking the profits of things that performed well in the quarter or even the month, and then buying things that have the setup, the anticipation of being able to move higher through, in this case, the last quarter of the year. All right, so that's what we're going into. The last 3 days of the month tend to be a little bit weaker because of redemptions. It doesn't mean that it's going to be significantly down, but there'll be waves of that selling because of that redemption cycle. Where are we on the S&P right now? Well, we have broken out. All right, we have broken out. You can see here. There was a high that we put in back in July, and we are now testing on the S&P futures, this 5750 area. We'll keep a close eye on that. As we go into the end of the quarter, I definitely want to focus on the long side of the S&P for daily time frame swing trades, which is to say the slightly longer term time horizon on the swing side of things. We can say the same thing about the Dow. Same thing about the NAS, right? And the Russell. So why would the emphasis for me be on the S&P? Because right now, all of them are neutral. All of them are neutral. The S&P is basically a mishmash. It's a combination of the Dow and the NASDAQ. And if you want to sort of have a foot in both camps, this is a great way to do it. Be careful with the Russell, though. Yeah. Anavera, be careful with the Russell, though, and here's why. KRE is moving higher. We want to see it benefit from the sector rotation of this end of quarter, but it is still one of the lagging sectors, and that is the most influential in terms of sectors. It's the most influential on the Russell, so keep that in mind. If we're looking at the Russell to follow through, you definitely want the KRE to be contributing, which means when we take a look at the sectors and their performance, if I look at month to date, KRE is languishing down here. So in order to be a little bit more confident, what I'd want to see, not on a month to date look back, but say preferably on a 5-day look back, meaning more recency bias, what's happening now as the month is winding down. What I'd want to keep an eye on is whether or not KRE, which is sitting at the bottom of this list, whether or not KRE can move higher from that spot. So just be careful with the Russell. It's having to work against a very, very weak, high concentration weighted sector. All right. So thank you so much, Munair. Yeah, I had a blast doing it. For those of you that may not know, we did our webinar on how we've been trading this month, and I jumped into our TradesViz. I just logged in here. Just jumped into TradesViz, showed you all a lot about not just September, but also August, and really sort of the unsung hero of it all is, look, in my mind, my job is to grow an account, right? That's always the goal every single month, every single week. But what's the mechanism? What's the formula? What's the thing that allows me to do it? And that's what yesterday's conversation was about. It's not just about risk. It's not just a risk formula, and it's not just a reward formula, and it's not just a position sizing formula. You put all this together, and this is really what it all has. Basically, as you can see, the proof of, it's really an account growth formula. So yes, it's risk minded. That's the most important thing. What's really, well, the first thing that I ever talk about when I'm setting up a trade, and the first thing that's set, is the risk. I always know exactly what the account risk is and the contract risk is. We talked about both those things in the webinar. But it's the formula of all three of these things that gives us this thing that we all want. So it's not just risk, and it's not just reward, it's not just position sizing. It's all of that put together in such a way that's geared for account growth. And it's different than a risk-minded formula. And it's different than a reward-minded, say, home run hitting formula. And it's different than just, okay, what's my position sizing, right? Those are all pieces of this account growth idea. So when the unsung hero of the growth of this month, and this is in an $18,500 account, the unsung hero is putting all three of these things together and really having that approach, that really all-encompassing approach. So, we've talked about risk before, we've talked about the pieces, but we've never talked about it putting together with a very, very specific ambition in mind, which is, slightly a more growth-oriented, slightly more ambitious approach to, Rag, I have a small account, how can I grow it? But this is going to apply to medium and this will apply to medium and large and Godzilla-sized accounts as well. I mentioned the webinar, I started off with $1,200 when I first started trading. So talk about small account. Talk about woefully underfunded, right? And then I think about it, it's kind of funny. I think when I was, my largest Forex account was actually roughly just over 1.2. So I went from a $1,200 account futures trader to eventually, I think the largest account that I was trading in Forex was 1.2. Talk about the ability to take the same formula, right, and apply it to any market and any account size. It's kind of funny when I think back. And that's why I feel that if you put this together, it's definitely a game changer. So I appreciate that. As far as the long term on different Chinese stock ETFs, they're finally getting moving. They're not a trend. If you're looking at the long term, you could wait. You could wait if you're looking at the long term. Really anything over 25 and a quarter on FXI. Andres was really a breakout. I don't want to be a buyer up here at $30 and a half dollars, but really anything as we got above 25 and a half was the breakout on the weekly chart for FXI. And on KWeb, you got an interesting opportunity here, Andres. You can look at 2480 to 3280, 2480 to 3280 as a range. Obviously, the upper level would be a breakout, but the lower level would be an interesting spot at which, if you want to buy shares, right? If you're thinking really long-term shares or even leaps, that would be a good zone for the entry. And by the way, this is using those tools that I mentioned in the webinar, the automated Darvis. You can see where those Darvis lines are automatically drawn. Notice, gang, that I don't ever have to draw anything on my charts unless I'm channeling my inner John Madden. Everything that I'm looking at is already automatically there, right? I'm never having to draw anything subjectively. Everything's already there. The structure's already been indicated. I can see the candle colors are shifting from neutral now to green. So that's a shift from neutral to bullish. So all I've got to do is step back, trust my top tier tools, and just read the tea leaves, as they say. But that's what I'm seeing there on FXI and KWeb. Walter says, great webinar. I loved doing it. I really did. Thank you so much, gang. No, I really appreciate it. I really enjoyed doing it. And I know it's a topic that's not a sexy topic. I get it. It's one of those things where, folks are wondering, what's the new indicator? What's the secret, strategy? And it's the formula, right? There's a reason Coke, I don't know if they really do. Someone could tell me for sure or not. But there's a reason supposedly Coke locks the formula for Coke in a vault. It's the formula, right? Yeah, they can tell you it's sugar and carbonated water and coloring and whatever else, right? But there's a formula. There's a specific way they make Coke. And I have found there's a specific way I have found over 30 plus years to grow an account. So I definitely appreciate the feedback, and I'm glad it helped. All right. Don't have any thoughts on Apple. I'm not a big fan of the Magnificence right now, Francisco. I'm just not a huge fan. I mean, XLK is starting to move a little bit better. But if I step back and I look at Apple and NVIDIA, which are really an XLK conversation. If I step back and, part of what we were talking about yesterday too is this watch list building process, right? How do I choose which symbol to run through the formula? What symbols are best positioned to grow an account? Are they choppy symbols? Are they symbols that have trends? Well, I think we all know trends are our friend. We hear that a lot. Are they all equal inside of a sector? This is the XLK, by the way. So what you're looking at here is the technology ETF, where Microsoft, NVIDIA, and Apple are the top three names. None of them are in trends, right? They're neutral trend. And how do I know that? Well, I use the top tier tools. I've got this little set of flags right there, these labels that tell me I've got a sideways momentum, sideways trend. Now, where is it not sideways? Oracle, Cisco. So these would be the best two to look at within the XLK. I would be very careful with semiconductors, which is where NVIDIA is largely weighted as well. But, you ask about Amazon. Now, that's a much different conversation. So let's open up consumer discretionary and go through the same process, what I like to call the trade this, not that process. So we want to find alignment. I don't want a weak NASDAQ and a strong sector within it. That's not alignment. I want to see a fairly positive NASDAQ. I'd like to see an outperforming sector, and then I'd like to see outperforming stocks. So is XLY? Yeah, it's more bullish than tech. Look at Amazon. And funny enough, you ask about Amazon, Francisco, and we have a long call position right now in Amazon. We're already long. And actually, let me do this because I've been sharing with you all the recaps from the Sector Secrets Mastery Room. And let's see, recap. Where are you? There you go. So this is the Monday. This is the recap. And did I forget? Oh, I must have forgot to save it. Shoot. Anyway, I'll tell you right now. I forgot to save it. So here's the recap. There's the Tuesday recap. There we go. All right. So here's the recap. Now, the same conversation that we had last night. And by the way, these are the two new swing entries from yesterday. Oh, my cap locks. So what you're looking at here is the formula at work, right? And what it is what we're trading. What has the possibility for follow through, thinking about the risk to the contract, risk to the account, and then ultimately making sure we have a favorable risk reward. Now, that's the formula. And what you're seeing here is that formula at work, right? So if we think about rinse and repeat, the same reason we're in XLF and we've scaled out twice, the same reason we're in XLI and we scaled out twice. We'll see what Abbott does. Big question mark over that. But this will be risk management. And when I shared with you all the trades viz, you saw that we had losses, but the losses are far smaller than the gains and far less frequent. So again, that's that formula at work. Okay. New swing entries. So the question was about Amazon, right, Francisco? So we bought the 190 calls already at 555. We've scaled out at 675. So we've taken out $1.25. And then if you watch the webinar, again, formula at work is what? Now we're shifting. Now we're shifting that risk profile to favor growth. And that's a really big deal. That first target how the formula uses that first target to shift the risk profile in favor of growth is super important and kicks off with the first time we pay ourselves. And we're in also in XLU. And last I checked, XLU should be moving pretty nicely towards our target potentially today as well. We were much higher earlier this morning, but obviously as we open up, looks like we're going to open up around 80. All right, cool. And just to give you a perspective, where did we buy XLU? We bought XLU just a little bit below this level. So not a huge move, but I'm going to be looking for, it's not the initial scale out is not a big one. So sometimes folks are kind of surprised by how little my first target is often going to capture. And that throws a lot of people off, especially when they're coming from a background of that first target should be a 50% winner or a 100% winner. Again, risk management starts with the first target. And then does it work? Yeah, absolutely. Account growth can come from that. Every one of these trades here were built from, let me make this a little bit bigger. Every one of these trades were built from that perspective that first target is really a leg of risk management. So the growth is still there. We don't have to be overly ambitious with that first target. So maybe the formula is pretty sexy. Yeah, I take that back. Maybe that formula is pretty darn sexy. All right. So again, if you're looking at NVIDIA, Apple, and Amazon, I showed you XLK. So here is SMH. All right. Now, SMH has been a laggard, gang. SMH has absolutely been a laggard. So if I'm looking at SMH, it might benefit from some sector rotation, but ultimately there are far better symbols that are moving higher. I don't care about one day. I don't even care about 2 days usually. What I want is to see a symbol that has the probability after a dip to move higher and then move higher from anywhere for 2 to 10 days, right? And beyond. So are there symbols that look pretty good in SMH? As good as it gets is probably Taiwan Semi, AVGO, maybe AMD. Intel's looking okay, right? So that's about where I'm looking. Now, a lot of folks get excited about a single day, right? One stock having one really good day. But remember, unless you're already in that name, it really doesn't matter. We're going to open up around 122 on NVIDIA. But here's the thing, unless you're already in, someone's going to chase that higher. Good luck with that, right? So remember, if you're chasing something higher, you need someone then to come in after and buy again. Now that can happen, but the structure, the environment that happens in is usually an uptrend. So that might work in, say, a 5-minute day trade today, but I would not expect it to be that likely on a longer term swing. And that's where time frame makes a really big difference. Yeah. What are my thoughts on Johnson & Johnson? My thoughts on this are really simple. We had a big winner in Johnson & Johnson, past tense. Yeah. We've already taken Johnson & Johnson from 315 to 375 to 620, right? Almost doubling. Not that that matters, but it's a nice gain. We finally closed it out. I'm not interested in healthcare and Johnson & Johnson to the same degree I was just a few weeks ago. Look, gang, a lot of things are going to happen where a lot of times the things that when I'm talking about certain symbols on the move, remember, because I have things like the top tier tools, I've got a really real time and quicker response because of the tools. It's not me, it's the tools. I've got a quicker response to shifts and trends. And because we're always looking at the calendar, the possibility of sector rotation, outperforming sectors, again, we're going to have a quicker response. There was a time where Johnson & Johnson was absolutely fantastic. We already took advantage of that. We took an option of $315 to $620 per contract. Now, it's a little late to the party and it's not the same structure. And going into the end of the month, healthcare and even financials, which I have been in, is not the same behavior that it once was. Look at where XLV is over the last 5 days. It's a laggard. Look at where XLV is now in terms of the month. Way down here. It's gone negative. It's a laggard. And Johnson & Johnson is the number 2 weighted stock. So these are things that, I'll teach you in the class. And these are the things that when we look at the symbols that have the probability for the most follow through, and then we apply the formula to it, gang, that's where the account growth comes. So what we trade is hugely important. Thank you for the question on Johnson and Johnson. All right, gang, that's a wrap. As always, thank you for being here for Charts and Coffee. If you haven't already had a chance, check out the replay of the webinar. We have it available. You can check it out at, let's see, where is that replay? You can check it out, and I believe it's reliable replay. So you can check that replay out if you've registered for the webinar. It's emailed out. So I believe it's sitting at, simplertrading.com/replay. By the way, if you missed yesterday's live presentation, they're always so much more fun live. I'm going to be with you all again. So pencil this in, October 2. Oh, hang on, my smoothie delivery is coming. You didn't add any sweetener? Smoothie delivery. Okay. All right. Thanks, Ma. Thanks. Okay. Thanks, Ma. Smoothie delivery. So today, by the way, for those of you, today is the blueberry. I got to go, but I just want to make sure everyone knows that we're going to be together next Wednesday, October 2nd at 8 p.m. You don't want to miss it. I'm going to get into a lot more detail on that account growth. We're going to touch on the SPX some more. A lot of folks are very excited to know that's going to be part of the bonus sessions for the class. So check that out, and I will see you all. Oh, heads up, I'm not going to see you tomorrow or Friday. So I'll see you all on Sunday. So we're going to take 2 days off of the Charts and Coffee. So I'll see you on Sunday. All right, gang? Be good to each other. I'll talk with you soon.